Good morning, everybody. It's Thursday, May 30th. This is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here at July corn up 3/4 at 456. July soybeans were up a penny and a quarter at 12.15 and a quarter. And July Chicago wheat was down 7 1/4 at 685 and a half. Weekly export sales have been pushed back a day, so they will be out tomorrow morning at 7:30 Central, and we'll certainly visit about those in the war room. They're pushed back due to the Memorial Day holiday there. Good morning, guys. Hope everybody's doing well. Ben, maybe just a few thoughts to get us kicked off here from the East, and then we'll throw it around the room here this morning.
Yep. I'm at a decent little window over here. I think there's been a lot of catch up. I think you will still see some switching in some places a little bit from corn to beans. Maybe minimally in this area, particularly. I think that is a becoming a more and more of a potential in places in the Dakotas and Minnesota. There's nothing exciting here about basis. There is some concern that with very little bean export demand, lots of bean acres, that delivery in the fall could be with some pretty poor basis. The commercials irrelevant of the board will factor their margin in off their export market, and I think that you have to be very cautious of that for beans that you have to deliver in the fall. It might not be a bad time to start snooping around for that. Those are the main things. Corn continues to flow pretty freely. Haven't seen much movement other than a grind lower in basis since late April, early May, when end users were looking for coverage for planting months. And then we had a fairly intermittent weather pattern over here with enough wetness to keep corn moving. So we see basis 15 to 20 off its highs that were traded just 4 weeks ago. So we've discussed before that there's probably quite a bit of corn that's left to move in the East, and I don't expect basis to do much positively here for at least 4 or 5 weeks, unless we see a real weather concern and people want to shut the bin doors shut.
That's very good. Jason, what's your opinion of the market right now? What's your thoughts?
It's kind of a broken record, right? I mean, right. We talked over and over about just the setup of the market. We've run into some good demand in corn, looking at just, old crop corn futures, right? We were, traded $4 corn and sub $4 corn early in the year between carry and just flat price rally. We've added 70 cents to corn price when you look at like the July contract. New crop prices are kind of pushing up into that $4.90, just short of $5 area. We were a little concerned about planting, and then we caught up pretty quick, right? And we kind of ran into some resistance levels, 200-day resistance level. Funds kind of covered their short position and are starting to add to it again. It's this, kind of boring market, for lack of a better, term, right? It's there's good reasons to be friendly, and there's a lot of good reasons that you can be bearish this market too, right? So I guess it makes sense the way the corn and soybean markets are acting. It's kind of a chop trade. There's I could see the bearish argument from people out there saying, look, we got it planted. There's plenty of soil moisture around. Why wouldn't we be trading a trend line corn yield? And I think there's, that's a fair argument, right? We still got to make that crop. But if things line up, we don't, we could pick up some corn acres as well, right? In the June report, there's just a lot of things that still need to happen to get there, right? And we've been kind of making that argument that there's a lot of things that can go wrong still too, right? So just this dichotomy of bearish, bullish.
Hard to be one right here.
It is, it's just it kind of makes sense when you look at price action, that we get kind of friendly right where it looks like it might do a little run, and then we fail, and then a few days later, it's like, oh man, this thing's looking really bearish, and, it probably triggers some farmer selling, saying I need to catch up, and then, then maybe we run up a little bit again, right? That's what a choppy trade looks like, right? It gets both sides of the market. It gets people who are bullish when they try to buy a rally, and guys that are bearish here when it breaks. So I would imagine we keep doing that until something changes, kind of getting guys. So, I don't know what you do with that information, right? I mean, if you want to catch up, probably, look for a rally, look for something that looks like, hey, here we go, and that's probably when you should start selling some stuff. Or, we're pulling back and everybody's getting bearish, and start talking about huge yields, maybe re-own some bushels or something if you want to play it that way. So,
yeah. I think you bring up a good point. And watching the chart, we're kind of slapping between in corn between the 50, 100-day moving average, and then getting stopped cold in the 200-day. And I think that there's probably not enough confidence today to take it through the downside barriers yet, and there's not enough fear on the upside to take it through the 200-day. And I do think that, tinfoil hat for a minute, I think it's going to be difficult to show any kind of excitement for new crop corn until July options go off the board. That would be, by nature, cleaning up a lot of what was left on the burdensome old crop problem. I think there's still people talking about that story, and we've, over the last couple of months, we've been pretty consistent in our thought process that a lot of that has been cleaned up. So with a pretty still a burdensome carry out, I think that it's difficult to focus on new crop outside of a major influx of negative news, whether it be weather or supportive news of demand, which demand has been very good and very steady. And we've had, a 50-cent bounce off of our lows. So I think the market is going to trade pretty freely in these ranges, at least in corn. And, until we have further inputs on what our crop looks like.
Yeah. And there's probably just not a lot of fear of a yield reduction on the next report either. Yeah. Right. So if you're kind of looking forward of like, hey, we can, if you want to be bearish corn and we just went up to a big moving average level, kind of failed, and then you kind of look forward, be like, well, you take a stab at selling it here. I can't blame anybody from that, because it's like, what's going to hurt me right now? You got some time probably before weather changes to a point that it matters for corn, and I don't see a big scare for the USDA report personally until we get to maybe the end. You take that and then report.
Kind of an early on the calendar at the 21st, I believe, is the July options expiration. And then we have a full week there before we get into the end of the month report, where we'll see updated acreage. I think there's some stocks on that. With some delayed planning, you're just then getting into a window where you can dial in what pollination weather forecasts are speculated to be, and you're still probably 3 weeks out. So,
yeah, I think looking this morning, I mean, wheat's been obviously a pretty hot market here, just with what's going on in Russia, and certainly that balance sheet is rapidly evolving. Excuse me. India talking about importing wheat for the first time in 6 years, anywhere between 3 to 5 million tons. So like I said, that balance sheet's changing. But I think, Ben, one thing we were talking about earlier this morning too is this new narrative with geopolitically with the war over there, and potentially, us changing our narrative on using weapons to attack, Russian targets and Russian infrastructure, and what that really means, with that whole deal. It's something worth noting, especially as powder keggy as that market's been, in the wheat complex.
I agree, that we've been focused on a lot of turmoil for, 2 years and 4 months on the uncertainty coming out of the Black Sea region. And Russia has been the boot on the throat of the world wheat market through a lot of that. And there was a lot of disappointment as headlines after the initial, few months really subsided. And with a reduced crop, if they start attacking infrastructure within Russia, particularly ports, export facilities, things like that, you could really kind of disrupt some of the free flowing grain that's come out of that region for a while. So I don't think that story of the Russian drought and the potential for this to escalate with U.S. weapons hitting deeper into Russian territory, I don't think that goes away. But I think more importantly is, what do we see for Russian crops, Ukraine crops, as we progress through summer, and they can sneak up on you. But there are certainly some things that, whether it be attacking ports, a smaller than anticipated Russian wheat crop, that could be fairly supportive to U.S. corn and wheat moving forward.
Yeah, just worth noting. I just thought that was pretty interesting that, we're even, entertaining those discussions is pretty crazy,
Yep.
given what they've said.
Well, I mean, India, right? I mean, I think they
raised
they increased their exports quite a bit last few years, right? When the
Mhm.
whole Russia debacle was going down, right? So their state supplies have come down to a point where they need to import, I guess is what it sounds like.
Yeah. I mean, they had a 40% tax, and they're looking to drop that sort of the end of June to get this thing rolling.
Right. Yeah. So world stocks to use numbers in wheat are pretty tight. So if you're having a bad Russia crop, yeah, it's just good news for. Yeah, I think Justin has hit on this a couple times last couple of days, right? Just it's good for demand for corn, right? If we can keep high wheat prices sustained, right, it's just going to build a stronger base for corn. And I think if you kind of talk about a $4 corn floor, is kind of what a lot of people think, right? With an oversupply of corn, maybe that moves up, right? Just with a stronger demand base. Maybe it's a $4.50 kind of minimum price type of thing, even with a large carry out in the U.S.
Sure.
Well, yeah, I also think, and this is tinfoil hat for a second, but our grower got squeezed last year, right? That was no different than a short squeeze. They had a really heavy long on their hands, and that the managed money will find the path of least resistance, and they found that. And I don't think that will be the case this year. I don't think the grower is going to get caught as long as they did last year, because we're not coming off a $1.20 break in 7 sessions. Quite frankly, a lot of people probably cannot stomach another year like they had last year, so they're forced into being a little more aggressive with their marketing. There was a lot of commercial narrative of, hey, if you're going to sell some old crop, you might as well sell some new crop while you're doing it. So I think that part of the equation is far less skewed than it was last year. So
yeah, that's what it feels like, for sure, just in our conversations. For sure. A couple of minutes coming into the open here. Rylan, yesterday livestock got headlined, if that's a term, I guess we could use. The news of China suspending U.S. beef imports. The Greeley, Colorado, there was a JBS plant that found traces of ractopamine. And so maybe touch a little bit on that and give us a few insights into cattle here as we come into the open.
Yeah, I mean, the headline came out and just crashed the market. I think everybody was wondering what the heck just happened, just because, it happened so hard, so fast. And overall, it's Greeley. So, I mean, we're talking 5,400 head of cattle a day at capacity that they can process. So I think the worry was just that there's going to be a lot of meat sitting around with nowhere to go. So we'll see. I mean, we'll see if that shows up in the beef or not. But I think, once again, you just kind of get a risk-off sense from something like that. And in the same breath, China lifted the ban on some Australian beef processing facilities. So it seems like there was a bit of a trade-off. Maybe it's kind of a headline war. Maybe it's a little bit more the whole, more trying to move away from U.S. imports. But I mean, I don't think this is going to change the supply and demand table all that much. All things considered, I mean, if they're going to need beef, they're going to source it from other facilities. It's just everybody's going to be a lot more cautious about ractopamine or any kind of feed additive they use if it's something that China doesn't want. So, I mean, China is a major player, and their appetite for beef has been growing pretty steadily. I mean, accumulated exports, at this point are close to 50,000 tons. So, I mean, like, we're following last year's pace, and we're well above 5-year average as far as that goes. So it's a growing market for their population, I think. So, anything to upset that kind of order may be seen as a little bit negative initially, but I don't know if it's going to translate to, hey, there's going to be more plants that get delisted, down the line or what. So I think everybody's just waiting kind of for the next headline. But overall, there was nothing really fundamental, that would cause the market to break like that. It seems like it was mostly just kind of the headline trade. We haven't seen any cash. Beef markets are still pretty firm here. Post Memorial Day bounce is still in effect. So it just kind of seemed like we got a little bit of risk off. So we'll see if the market wants to do with it. If anything, is probably a buying opportunity, to be honest. But I think just everybody's erring on the side of caution, just with it being a kind of shortened holiday week and all.
Beautiful. Appreciate that, Ron. We'll keep an eye on any new developments with regard to that suspension of imports there. Just came into the open here. July corn down a quarter, 4.55 is the last. July soybeans are up 1 3/4, 12.15 3/4. And July Chicago wheat down 9 at 6.84. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate all the thoughts and comments here this morning, guys. It was a good conversation. Hope everybody has a great day, and we look forward to talking to you tomorrow.